and I found this on that paper. It was an editorial saying going gold. The pointlessness of holding bullion continues to sink in. Saturday, December 3rd, 2022, Maneco 64, home of alternative economics and contrarian views. So we're going to look at the FT today and its war on gold. It's been ongoing since at least 2004. That's when I detected it. And it continues, despite the fact that gold has gone up 3.5 times since 2004 when they did a hit piece on gold, which we'll look into. In British pounds, has gone up 5.5 times. So before I start, just wanted to talk a little bit about what happened yesterday with the U.S. jobs data. So yesterday I went to play golf around 11 o'clock. So I didn't catch the data. I didn't catch really the market move right away. But it was probably a good thing because at the end of the day, I saw what happened. And I think my take on it is that it was a relatively stronger than expected number. But we know these numbers are tinkered with. The non-farm payroll is a survey which they can really manipulate and make it look a lot better. So yeah, it was 263,000. Yes, the hourly earnings, and I said that yesterday in my video, they could be something that hurts the markets, and they were strong. They went up by 0.6 month on month versus an expectation of 0.3. But I saw that the initial reaction for the markets was this. Stocks plummeted. Well, they dropped quite sharply. Gold and silver dropped quite sharply. I think gold went down to around 1773, 74. Bond yields spiked in the short end and in the longer end. But then at the end of the day, actually, the stock market rallied. They finished pretty much unchanged. I think the Dow finished, let's see here, up 30 points. S&P finished down 5, and NASDAQ finished down 20. So basically unchanged. I would say we saw the 10-year yield actually drop below 350. So it closed on the low of the week. We saw the two-year note come off its highs. Didn't go as far in terms of monthly lows as the 10-year. And gold, by the way, traded back up to almost 1,800 at the end of the day, spot gold. Silver actually traded up on the day, which was very encouraging. Mining shares did well as well. Well, I think the market doesn't believe in the jobs data, and they see a lot more trouble in the economy. And I think in this case, the market could be right. We've seen numbers like the Chicago PMI drop massively. We're seeing trouble in the commercial real estate, of course, with Blackstone holding off redemptions. So yeah, that's what I think is happening. And now, of course, the FOMC meeting is the next big thing. It starts on the 14th and the decision's on the 15th. So that's what I think happened there. And just to give you an idea about silver, have a little look at silver here. The last time silver went up for 4 months straight was back in 2020, when we saw silver go from around $12 to $30. And right now we're in the 4th month of gains in silver. Am I saying silver is going to go up 164% like it did then? No, but I think it looks quite encouraging, the price move in silver, gold as well, of course. So let's look at the latest hit piece by the FT on gold. And I have to thank one of the viewers, one of the Patreons that I have, the patrons on Patreon. He sent me a message. Have you seen the latest hit piece that the FT did on gold. So I found it. It was written, I think, it came out yesterday, and it's by a guy called Stefan Wagstill, and it's an opinion, FT Wealth opinion. Gold still adds a little luster to a very well diversified portfolio. Volatility in prices has taken the sheen off the metal as a safe haven asset, though the rich still like their jewelry. So there's the first hit punch on gold. Oh, it's just jewelry, right? Even though we know that JP Morgan once said, gold is money, everything else is credit. And I wouldn't argue with the JP Morgan. I'm not saying I think he was a good guy. I'm just saying he knew what money was. Anyway, this is supposed to be for sophisticated investors, people who read DFT. They've got advertisement here, as you can see, from Pictet Wealth Management. And here we have this guy saying this. So he starts the article, just give you an idea of what he is saying. He says, on the face of it, gold has lost none of its age-old allure. Russia-born billionaire Vladislav Doronin this year used nearly 40 kilograms of the stuff to gild the outside of the Crown Building, a landmark New York skyscraper housing a hotel and luxury apartments. It is an extravagance reminiscent of Croesus, the legendary wealthy king of ancient Lydia, who routinely donated bullion to gold plate statues in temples when he needed a spot of divine assistance. So the interesting thing as well, if you look at this chart, gold right now is like back to 1800, and he used a chart of gold when it was near the lows a few weeks ago. I mean, it came out yesterday. He could have done a little bit of work. So this guy, I don't think he knows much about gold, and he doesn't really have any idea that gold has been money and it's just a store of wealth. And the volatility he talks about, I think it's more to do with the nature of the fiat currencies. They're the ones that are volatile, the ones that are backed by nothing. So let's skip here to the end, see what he says. And I'll put a link again to this article through the archive.ph webpage so you can read it for free. He says, of course, the past is no guide to the future. As the investment warnings say, gold probably has a place in a very well-diversified portfolio, but unless you want to plate a tower block or even a statue, don't let the glitter tempt you away from the dull staples in your portfolio. So let's look at how the dull portfolio has done this year. So let's say you invested in bonds. Well, this year, the TLT ETF, that's down 26%. Let's say you invested in some stocks, right? The 60-40 strategy. Well, let's have a look. The Dow Jones is down 5%. S&P is down 14.5%. NASDAQ is down 26.5%. And boring old gold, volatile gold is down 1.2%. So it doesn't add up. Well, in British pounds, of course, it's up almost 10%. So same thing in euros and other currencies. So gold has done its job. And I said I've spoken about this in the past before, about the FT. And so this was April 16th, 2004. And I told this story before, but I'll tell it again. I was going to work into the city of London. I worked in the city for 20 years. It was around 6 a.m. Used to take an early train to be in the office before 7. And I usually used to buy the FT, the paper FT. And I like going to the editorial opinion section. And I found this on that paper. It was an editorial saying going gold. The pointlessness of holding bullion continues to sink in. And by then I had already started buying gold and silver. I had already started looking at our monetary system, at the history of gold and money and silver, and at the history of fiat currency. And when I saw this editorial, which has no name to it, it's an anonymous one, I thought, this is ridiculous. And I thought it was so outrageous that it was when I discovered fake news, you see. I thought it was so outrageous, I cut off the editorial and I even laminated it. And at the time, gold was at $400 an ounce in British pounds. As you can see here from the LBMA data, it was just below 223. So as I said earlier, gold is going from 223 pounds to 1,462 today. And I'm glad I didn't listen to the FT, and I've never really trusted the mainstream, but this was one of the points, one of the events that really showed to me that a lot of this mainstream media is fake news, and I started putting less and less importance into it. So I'm not gonna read the whole going gold, but you can pause the screen here and go through it. But this is what the editorial says at the end. We'll go quickly through it though. Given the pointlessness holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return of the public purse by limiting the impact on the price. That would imply some irrationality on the part of the market. But then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. Whatever the speed, the direction is clear. Gold is on its way out as an investment and reserve asset. Three cheers for that. And it's ironic because we're seeing gold holdings by central banks increasing massively here. FT, of course, made that editorial, wrote that editorial in 2004. It kept going down a bit, but ever since 08, it's going right back up. It's the highest since November, highest level since November 1974. So are they just ignorant, the FT and the people who write for them, about gold? I think partly yes, but I think the other point that I'd make is that they don't want the general public to be in gold, because they want people to stay in this debt-based system where the people who probably finance the FT through their advertisements, through their support, whatever, they benefit from paper assets and people getting squeezed in and out of investments and losing a lot of money. They don't want people to have a sound monetary base, to be their own central bank. So that's why you get these hit pieces, I think. And it's another reason for you, in my opinion, to keep stacking, because I'm continuing to stack. So there you go. I think it's a great contrary indicator. I think the day that the FT starts writing good things about gold and really making it public and putting it on its front page, that will probably be the day where the fiat currencies have all basically virtually collapsed in terms of purchasing power, and the FT is going to have to admit that gold was the place to be, and silver as well, I would say. So there you go. If you enjoyed this video, make sure you hit the like button, and with that, I wish you all a great weekend. Take care. Bye.